Crypto is a weird place because you only really hear about the success stories. No one likes to talk about their losses. You hear about the meme coin millionaires. You hear about the people that bought a coin and did 100x overnight. You only hear about the successes. But the reality is crypto is a dark place. No one talks about insiders dumping on retail, market makers extracting, stories and narratives engineered to bleed you dry. So in this video, we're going to get into that. I'm going to uncover the truth about crypto and what it actually is. It's not pretty. It's designed to extract from you. But if you play the game correctly, you can actually be the one to profit and make millions upon millions of dollars. And also, we're going to get into the traps that most people fall for. And they don't actually realize what crypto is, so you can understand it and then profit from it. So let's get into the video, guys. We're going to start off with the contents. First part of the content is the pyramid of profit. So who really wins? We're going to get into who's at the top of the pyramid, like who's making all the money, and then who's at the very bottom. Who's the person at the bottom that's getting extracted from? Because crypto is a zero-sum game. Every dollar that you make, someone else is taken. So this is why the pyramid is so important to understand. Next thing we're going to go through is the hidden game. Why crypto is mostly extraction and who are these extractors. The structural traps, insiders, market makers, and supply games. Psychological traps, the behaviors that guarantee defeat. Narratives traps, stories as weapons of extraction. Not many people talk about this. Narrative traps. And survival framework, like I said, how you can stay alive. So let's get right into it. We're going to begin with the pyramid of profit. The pyramid of profit, who actually wins, okay? So not surprisingly, insiders and team right at the top. The reality is that teams and VCs, they're buying early before you even know the coin exists. They get in right at the pico bottom, so their profit is guaranteed the moment the coin is launched. This is why devs and insiders and VCs walk away with all the profit while retail bleeds and loses money. So what you got to understand about coins is that if you're buying a meme coin, let's say, and you're the very first person to enter that meme coin, you can't lose money. Because if everyone else enters after you, they could all sell, but you'd still have your initial allocation that you can sell for the same price that you bought it as. So let's say I put in $1,000, 99 other people bought, so 100 people in the coin, and then they all sold, I can still sell $1,000 worth of that meme coin. So this is the point. The earlier you get in, the more asymmetry you have, the less chance you have of losing, the more chance you have of basically shitting on everyone else. That's the fucking game. KOLs, the middle layer. KOLs, crypto influencers, are handed free supply in exchange for calls. By the time you see the tweet or video, they are literally selling into your buys. So they don't profit from being right, but they profit from selling bags on their own followers. This is the brutal truth. Smart retail in the middle. A minority of retail catches the trade early. They buy low, take profits into strength, sometimes walk away with good gains. But even if they're downstream, they're downstream on insiders and KOLs. They're winning scraps from a much larger table. So you're trying to take money from people that are already above you. You're trying to shit on someone else. It's a shit-in hierarchy, okay? So this is the pyramid here. You got the team, you got the insiders, you got smart retail, dumb retail, and exit liquidity. Someone has to lose in this game. Unfortunately, in the financial markets, someone has to lose. And the person that loses is you. No, I'm joking. So, dumb retail at the bottom, the majority. They buy when crypto Twitter is the loudest, when the community feels the strongest, or even when the media talks about the coin. They believe they're early, but in reality, they're funding exits for everyone else above them. So I've been at events. I've literally been at events. I went to Token 2049 this May 2025, and I met the devs who launched these coins. I'm not going to say the coins because I don't want to call them out. Iced APs. I swear to God, their watches were nicer than mine. Iced APs. They had Pateks, super nice, expensive watches. Millions made overnight. Meanwhile, retail holders were still convinced that they were early. That's the pyramid in action. And the reality is, the watch on their wrist, it came from someone else. That's the brutal truth. The hidden game. Why crypto is mostly extraction. There's no cash flow. So stocks create value through businesses that generate cash flow. Dividends, buybacks, growth. That's real productivity being made. Crypto has none of this. Coins are not businesses, they're vehicles for speculation. Casino dynamics. Crypto is fundamentally distribution dressed up as innovation. This is a black pill. This is such a black pill. Money doesn't grow in the system. It simply moves from weak players to stronger ones. The casino continues only if new liquidity continues to enter the system. So it's a little bit more complicated than this because crypto is a growing industry. I mean, we've seen stablecoin value increase significantly recently. I think that stablecoin transaction volumes actually surpassed MasterCard and Visa in 2024. So it's a little, you have to take this with a pinch of salt. Crypto is growing, but the fundamental dynamic, especially when you're trading meme coins, altcoins, VC coins, is that it is a distribution. Money is being moved around from people that are better than people that are weaker. So the team will always make the money. They have to make the money from someone. They're stealing that money from people that aren't very good traders. That's just the truth. It's a negative sum environment. Before you lose to another trader, the system is slowly bleeding you out. It's death by 1,000 cuts, right? Fees, spreads, MEV, and slippage drain on capital on every single transaction. Every single time you make a transaction, I don't care what it is, unless you build your own platform, which you're not going to do. Binance, Jupiter, Phantom Swap, anything, they're taking a small fee, typically 0.1%. That adds up. So that means that money is, it's not a like equal sum game. It's actually a negative sum game because money is leaving the system. The illusion of utility. So teams sell the dream of real world adoption. But for most coins, utility is just a cover. The token itself is the product. Hype and narrative create demand, not cash flow or users. It's what we said before about crypto not having any cash flow, okay? It's just extraction mechanism. Meme coins versus VC coins. So meme coins appear transparent because the supply is fully diluted from launch. Fully diluted means that the supply is not locked up anywhere. It's like fully out, okay? That doesn't make it fair. Insiders still get early supply. Teams still dump through market makers. You rarely know who's holding sides. KOLs get given 1%, dump it on market, right? VCs, at least it's transparent. At least VCs publish the unlock schedule, so you know when people are about to dump. With meme coins, selling is constant, hidden, and harder to track. It's simply another vehicle for extraction. I'm going to give you a very good analogy. Brett, I'm sure you guys all remember Brett meme coin on base. The market maker there, I heard from someone, they were making so much money. I think they were making like 300K a day. Is that correct? I want to make sure my numbers are correct. Whatever it was, they were making so much money, probably like 100K a day. It was stupid. They were extracting so much money. And you wonder why the trenches are dead. The trenches are dead because there's so much extraction, okay? Structural traps. Insiders, market makers, and supply games. Market makers are silent extractors, exactly what I just said. Most market makers skim 20 to 30% of every buy made. This literally stunts the upside of a coin by 20 to 30% while making the team rich for selling, right? But the deeper edge is in their insider access. When they know a team's about to launch, a marketing push, when a KOL campaign's lined up, when liquidity is being rotated, they literally will buy before this event, wait for the event to happen, and dump it, okay? So what they say is that teams say, we haven't sold. But that's technically because the market maker is doing it for them. So what teams do, they'll send the supply to the market maker will sell on their behalf, the market maker takes a small cut, 10 to 20%, and then they give the profits back to the team. The team can put their hands up and say, we didn't sell. Okay, bro, but like you basically did. You just gave it to someone else to sell. Think about this, Brett. Let's say, I don't know what the height was. Let's say they were doing like 1 million volume per day. Half of that volume, 2 million volume, to keep it small. They were doing 2 million volume per day. Half of that volume is going to be buying pressure, just generally. So about $1 million of buying pressure per day. The market maker would be taking 20 to 30% of that. So my numbers add up. They'd be making about 200 to 300K in profit every single day. And you wonder why the trenches are all fucked up. That's the reason why, okay? It's what people don't talk about on YouTube. Information asymmetry. Market makers, insiders, and KOLs always sit upstream of the information flow. They know the unlock calendars, the OTC deals, and planned announcements. Retail only sees the news once it's already been priced in because these insiders will buy in before the event. And by then, insiders are positioned already. Supply unlock games. VC tokens bleed value through cliffs and vesting schedules. Every month, new supply quietly enters the market. So what VCs typically do, they have a few very large unlocks, maybe like a public sale or private sale unlock. But then they'll have like every month very small unlocks. They'll have like 2% unlocks. People forget about those. So it kind of quietly enters the market. Retail thinks price is volatile, but in reality, they're just getting diluted. Stake and rewards and yield are the same thing in disguise. It's inflation hidden by attractive wording. So stake and rewards increase the token supply in the market, and same with yield. Stealth selling mechanisms. So we talked about teams, they put their hands up, they say, we haven't sold anything. Technically, they're right, but they have other ways of selling. Like I said, one is through the market maker we've already talked about. The other way is OTC deals behind closed doors. What's an OTC deal? It's over-the-counter deal. So what they'll do is they have their supply. Let's say they have 1% of their supply and 1% of their supply is worth, I don't know, 100K. They'll find a buyer, a willing buyer. They'll give them a small discount. They say, okay, this 1% is worth 100K. We're going to sell it to you for 90K, 10% discount, but just promise not to sell it all at once. And then the guy will transfer them USDC, so essentially selling it. They'll transfer them the tokens. It's not visible on any DEX because it was just a transfer through the blockchain. And they basically sold him. What's the guy going to do? The guy's going to dump it, obviously, at some point. The guy's going to hope it goes up and he can dump it. But essentially, they're selling, right? But they didn't sell. Okay, sure, bro. One-sided liquidity pools in Solana that don't show up on chain. This is what Hayden's team, Hayden Kelsey, this is what he did with the Libra launch. Okay, they just had a one-sided Solana LP. So any SOL that was put in gets immediately converted into USDC. And that's it, okay? Exchange market makers quietly sell through order books. So if Binance lists a token, you can't see what they're doing on the back end. They're just quietly selling. Very, very difficult to see. No transparency. So this is why you'll hear we haven't sold. Technically, it's true, but it's far from the full picture. No transparency. In equity, disclosure is mandatory. Crypto, nothing forces teams, to be honest. KOLs dump while shilling. It's the Wild West, right? I mean, it's the game we play. I'm not saying it's a bad thing, it just is what it is. Teams can coordinate with market makers and offload silently. Retail believes they're trading in a fair market, but in reality, they're operating in the Wild West. Exactly what I said. It's like the extraction flywheel. Every marketing event, KOL campaign, or exchange listing is not just about adoption, it's a liquidity event. Insiders and market makers offload into the very hype that they manufacture. What looks bullish on the surface is oftentimes just a marketing escape exit opportunity in disguise. So this is what it looks like. So what you get marketing push, hype builds. Insiders and market makers sell into that hype, and then the token goes down, and what do? They do it again. Extraction device, extraction, okay? The psychological traps and behaviors that guarantee defeat. Very short section. Herd behavior. Okay? So by the time crypto Twitter is the loudest, insiders are already selling. So retail buys when the narrative feels the safest and sells when fear is the biggest. Following the crowd is a mistake because you've got to remember, these market makers and the team are literally manufacturing this for you to buy in. Don't be their exit liquidity. And community pressure. The teams create communities, and the communities reward blind bullishness and shame selling. Selling too early makes you an outcast, while diamond-handed earns praise. The only incentive a team has for you guys is they, one, want you to buy, and two, want you to never sell. So these social dynamics keep you locked in while insiders unload. It's very important for you guys to understand that. It's probably the biggest black pill, narrative trap, stories as a weapon of extraction. Engineered narratives. Most narratives in crypto are not organic. They're not organic. Take it from me. I've been in the back end of these. I know what happens. I've spoken to people that have been involved in these narratives. They're created by insiders and amplified by KOLs to attract fresh liquidity. AI coins, tokenization, celebrity tokens, these aren't organically formed narratives. They're campaigns. I've literally watched KOLs get given bags before they started their organic narrative content. I've seen it. The story always comes before positioning. KOL incentives. When a KOL shills a project, it's rarely because they believe in it. Sometimes they do. Sometimes there are good KOLs out there, but most of the time they're given 1% of the project for free, their followers or exit liquidity, and the story is just bait. Late entry FOMO. When a narrative finally hits mainstream news, like CNBC, Bloomberg, or even CT consensus, the move is already over. Public consensus is not a buy signal. It's usually the top, and when insiders and market makers and teams and insiders and everyone else is selling. Weaponized hype. The stories aren't about truth, they're about timing. Narratives exist to keep you holding while others sell, or make you buy while they rotate out. Every bullish storyline has an extraction schedule hidden underneath. Recycled dreams, narratives. Have you noticed? The same narratives literally come back every cycle. Super cycle, digital gold, DeFi revolution. I'll give you the best example of this because we were talking about narrative traps and stories of weapons of extraction. You might be thinking to yourself, well, listen, okay, you're telling me that KOLs and teams manufacture these narratives. I kind of believe you, but is that true? It is, and I'll explain to you why. In 2021, some of the very big organizations, everyone was very, very bullish on Bitcoin. That made people buy. And then guess what? At the bottom, November 2022, everyone was bearish. Everyone, the biggest corporations, everyone was bearish. No one was bullish on crypto. They were even FUDing crypto. Why? Because they wanted an entry. They were accumulating at the bottom. And then guess what? When Bitcoin goes up, then they start bull posting. Then they release the ETF because they're in their bags. They're in. And they're happy to push it. So it happens at the very highest levels, not just in crypto, in everything. Okay? The system does not want you to win. The system is an incentive structure and they don't want you to win. So you need to be smart, think for yourself. We'll work together, we'll win together, okay? They're designed to keep you buy, make you buy, keep you holding so you get extracted from. So the survival framework, well, how do you stay alive? Well, the first thing you need is an understanding. You need to understand what I've just taught you. Internalize it. Understand that people aren't there to help you. People are there to extract from you. Second thing is risk management. So survival always comes before upside. Professionals rotate into stables when the risk reward is no longer favorable. So when you think insiders are going to start dumping on you, when you see the stories of narrative and hype, start taking profits. Only play asymmetry. So bet with a small chance of big multiples. This means getting in as close to the bottom with the insiders and the teams as possible. Secure an information edge. Learn from them. Learn from the teams and the market makers, the KOLs. They have an informational edge. So secure this yourself. Build networks, track wallets, get into good private groups. Go to token 2049. By the time CT is allowed the price, the move is already priced in. So you've got to get in this and get into the right group so you can get informational asymmetry. Patience pays. Sometimes the best move is no move. Okay? Survival mindset. The goal isn't to catch every single pump. The goal is to stay solvent long enough to play the next cycle. Outlasting is how wealth compounds in a PvP market. You need to expand your time horizon and realize that there'll always be another opportunity. By the time most traders realize the dark side of crypto, they've already been bled out. So learn it early and you'll still be standing while the rest are wiped out. If you have any questions about this, guys, please leave a comment down below. And I wish you an amazing day. Take care, guys. Bye-bye.